guys, we got this great clip from one of our long content videos. Don't forget to hit the subscribe button. Enjoy. Guys, real estate is referred to as the long game, and there are good reasons for that. If you invest in stocks, you can do this on a daily basis, trade in and out, see your money move in and move out. Highly dangerous, high risk to reward. Basically, you're gambling if you're not really good at it, if you're not trained at it. With real estate, it's a much slower pace. You get to take the time to find the deal of a lifetime by looking at dozens and dozens or hundreds of properties and then making all of these offers on things until you can buy the very best deal. So it takes time to find a great deal. It takes time to fix them up. It may even take time to renovate them. And we're going to talk about all of that right now. So with real estate, unlike some of these other ways that you might invest through a 401k or through an IRA or into the stock market or into stocks and bonds, real estate is going to appreciate over time. Real estate has a proven track record for wealthy people. If you look at the world's top 1%, every one of them has something in common, and it's that they hold or they make their money in real estate. So if you go out and you create a business and you make tons of money, you're going to store your wealth in real estate. But a lot of people make their money in real estate. We've done really well over the years by being value-add real estate investors. And part of the kind of benefits to being in the real estate game is that over time, you're going to see this appreciation. It's a magical thing, right? Like, it's predictable. It's going to go up. I would say this, and I've said this for years, I can go to sleep at night knowing that I have the house on 123 Smith Street in Orlando, Florida, and that house is going to be there next year. The house is going to continue to collect rents. The house is going to continue to pay for itself and increase in value. So I've been there and done that with the stock market, had quick wins and then massive losses. I didn't like that game at all. I much prefer the predictability of real estate and how it just over time, even when you have a correction and a crash, and we just did back in 2008, had this massive correction and we went through it and it hurt really bad. But because we stuck to it and because we stayed with it, we've been able to get all of the losses back. Had we held on to some of that real estate instead of selling it, at the time we were just buy, fix, and sell, buy, fix, and sell. We weren't doing anything with cash flow. We learned from that crash how to become value-add real estate investors for cash flow. And that, guys, has been the ticket. That has been the golden ticket for the flip-flop flipper to get out of what we would call the rat race. Because for 10 years of my life, even though I was in business for myself and I was buying and selling real estate, I was really doing something where I had created myself a job. And if I didn't buy the next piece of real estate and then fix it up and then sell it, I wasn't going to make any more money. And so because we went through this massive correction, we started to buy things to hold. I wish I had done it earlier. Hopefully you can learn from my mistake and you don't have to go through this long period of time where you buy dozens or hundreds or thousands of pieces of property and make the mistake of not holding on to the really best stuff. So we say all the time on this channel, if you're going to be real estate investors, you need to fight like hell to hold on to some of these pieces of real estate. And when you can buy something, fix it up, get it cash flowing and returning a really nice chunk, you're then stepping outside of what everybody else is doing. You're stepping out of the rat race or the matrix. You're getting away from the trap that society has put us in. Like, the schools teach us to be employees. The employees teach us to work for the dollar, trade time for money, and then the government teaches us to just pay taxes. So all of those are a trap in our opinion. And if you watch much of our content, you'll learn pretty quickly that we are really not in favor of big government. We really don't love the big business combination with big government. We don't like paying a whole bunch of taxes to the government. We prefer to maintain control of our money, and we believe that we're able to do that through being real estate investors. And you can do it too. So go ahead, give this video a like, subscribe to the channel, guys. Here's how this long game works in real estate. You buy something, you fix it up, you get it rented out. Over time, rents will rise, values will rise. It may take you some time to fix the property up. Then you're going to have to invest more time to finding that right tenant and getting the cash flow. But if you take the time to do it, if you will invest the time, the effort, and the money, it's always going to be worth it, guys. Wealth is created by owning real estate for a really, really long period of time. It took me a long time to figure this out, as I alluded to earlier, and you guys can learn from my mistakes. You don't have to do what I did. So if you're going to become a real estate investor, go in with the mindset that, yeah, you may need to buy something and sell it quick and get some chunks of money, but you're going to reinvest that money into properties that you're going to hold for the long term. And if you can buy real estate, whether it's single family houses or warehouses or storage facilities, it doesn't matter. It can be strip malls. If you can buy stuff, get it renovated to its highest and best use, become value add real estate investors, and then get it cash flowing and hold on to that and collect that passive income over time, you're going to hit a grand slam home run every single time. And hey guys, thanks for watching that. Subscribe to our channel, watch this next, and then also check out the pinned content for more great content, guys. God bless.